The financial world just experienced a day that will be written in history books as a dark omen. We are talking about a collapse so massive that it wiped out $141 trillion from global markets in a single session. Silver, an asset that has been traded for thousands of years, crashed by 35%. This is a move unseen in data going back to the 1700s. Even Bitcoin, the digital gold, couldn't hold its ground, losing the critical $80,000 support level. But to understand why this happened, we have to look past the charts and into the shadows of power. The primary trigger seemed to be the announcement of the new Federal Reserve Chair. Donald Trump's choice was Kevin Warsh. To the average observer, this might sound like a standard political appointment. But in the world of high finance, it was a declaration of war, or perhaps a forced surrender. Warsh is a known hawk. He has historically opposed massive money printing and aggressive interest rate cuts. This is the exact opposite of Trump's public economic policy. Trump wanted to devalue the debt by boosting gold, silver, and Bitcoin, so why would he pick the one man who stands in the way of that plan? This is where the story turns into a global thriller. On the very same day as the Fed announcement, the Department of Justice began releasing massive files related to the Jeffrey Epstein case. These documents contain devastating allegations involving Bill Gates, Elon Musk, and most importantly, Trump himself. The timing was too perfect to be a coincidence. International financial elites, those who benefit from the endless printing of paper money, likely use these files as a weapon. They put Trump in a corner, either appoint a Fed chair who serves the old guard, or face the public release of evidence that could destroy his legacy. It was a checkmate move. By forcing Warsh into the Fed, the global establishment triggered a massive sell-off to protect their short positions and crush the momentum of precious metals. Let's look at the mechanics of the crash. American banks, following the new political direction, had started closing their short positions on silver, but global banks outside the US were still heavily bet against it. As silver prices began to skyrocket, these institutions faced total collapse. They needed the prices to drop, and they needed it fast. The appointment of a hawk like Warsh provided the perfect environment for this controlled demolition. When $15 trillion evaporated from the markets, some claim the government used it to pay off debt. That is a myth. Money doesn't just transfer to debt. Value simply vanishes when trust is destroyed. Despite the rumors, there is no evidence that the U.S. Treasury sold its gold reserves to cause this crash. Since 1971, the goal of the Treasury has been to protect its remaining 8 to 1,000 tons of gold, not liquidate it. What we saw was a psychological operation. When Gumush silver hit $80 or $90, the technical formations became parabolic. As any experienced trader knows, parabolic moves almost always end in a violent correction. The establishment simply chose the most painful moment to pull the plug. So, where do we go from here? For those who have been holding silver and gold for years, this is just a storm to be weathered. But for the new investor, the lesson is clear. Never bet your entire life on a single play. We have always advocated for the basket strategy. A man who moves in silence doesn't gamble with his home or his family's future. You need a balance of gold, silver, Bitcoin, and solid technology stocks. The year 2026 was always predicted to be a year of crisis. The international financial powers want a reset, and they just won the first round. But the game isn't over. Silver will likely consolidate between $70 and $90 to regain its strength. If it breaks back above its previous highs, the path to $3 to $100 or $4 to $100 remains open. Stay calm, keep your eyes on the long-term cycle, and remember, in a world of blackmail and paper lies, physical assets and cold logic are your only true allies. Watch the moves of the silent ones and protect your wealth. The battle for the future of money has only just begun.